Well, NASDAQ has been streaking higher since the Brexit lows. Every week's been a baby step higher, and now it's at new highs. The S&P and the Dow, they've been taking a breather. They've been going sideways in a relatively constructive way. And the leading names, a number of leading names, such as we mentioned, Facebook, Google, which is Alphabet now, Priceline, and Amazon, they've all been trading fairly tightly near new highs over the last few days. The pullback wasn't too surprising because the VIX hit new lows that haven't been seen since last August. When the VIX tends to scrape down around 11, the market tends to have pullbacks, and the pullbacks can be very minor, like maybe a 1 or 2 day pullback, or it's something more material. That's why we always remind members to remain on guard with their stops tight, just in the event that the market might actually pull back bigger than it might have. We've seen that kind of pattern a number of times in 2015, where the markets just couldn't get going to new highs and would yank back in over a period of 2 or 3 days, and leading stocks would get yanked in even harder than that. So at any rate, I wanted to mention, we did mention gold and silver. They had a pullback of sorts, and it looks like they're stabilizing, and given the buyer here, probably out to the next year or so, would not be surprised to see this uptrend that emerged in early January continuing, just because it represents all the QE money printing going on, and also the loss of confidence in governments, which is becoming more and more widespread. The internet is a great equalizer of sorts, since more and more people are waking up to what's really going on and not relying so much on mainstream media. And that's a big changeover that we haven't seen, actually, I don't think, in the history of news. It's always been very centralized, certainly before the internet. But let's just say that people are very well aware of that, and those who wish to control thought, as George Orwell mentioned many times in 1984, they're of course fighting back by creating all sorts of noise and fictitious blogs, websites, and so forth, while continuing to do what they can to censor, to color public opinion. And there's interesting crypto technologies out there that are again, that's countering that move by censorship, in terms of allowing people to express themselves completely with complete privacy. And it's interesting because this one particular technology just emerged a couple months ago and already has a valuation of something in the neighborhood of 350 million. So I think it's people's vote that's what they're looking for. They don't want a Facebook that does censor and color. They want something that's much more free. And Ethereum is another interesting technology that is all about the freedom and privacy. So that actually now has a valuation of over $1 billion, because that went up about 30-fold this year. But at any rate, wanted to mention a few stocks, because that's what we specialize in. We mentioned TWLO, and that is a leader in cloud communications platforms. And the collaboration is clearly the way forward. That's what we're seeing in terms of technologies that are going to do very well. Amazon's and many of these big companies are taking note of this, and so they are producing their best products through collaborations. And TWLO was mentioned as first a buyable gap up, but as we mentioned, if you use, even if you don't use the 620 lines, you could see that it started to head lower from the open, so you would be on guard to take a position, and it just kept going down. And then it closed sort of mid-bar. It was kind of a weak pocket pivot close by the end of the day, and now it's going to new highs 2 days later. The thing of it is this is a great leader. We always love leaders in their space, and cloud platforms are taking collaboration to new levels. So this is definitely one to keep an eye on. There's also been a number of other leaders in their own respective spaces, actually in the Chinese area, because we've got Jack Ma's company, the very impressive CEO who runs BABA, B-A-B-A, and that's basically the Chinese Amazon. And this is something that's moved higher on strong earnings. It was coming out of a fairly low in the handle or very long platform in the base, and it has a valuation of 227 billion. But because it is a leader in its space, it could go higher. It could it potentially could double from here over time, simply because they do things that are they do better than Amazon. They have some sort of network where where you basically don't pay any postage. So if you don't mind waiting a little bit longer than Amazon, you get the product for free of postage, and also the product tends to often be lower in cost than what you'd find in Amazon. They also have a very widespread number of products that are interesting that I've actually ended up buying because I couldn't find them on Amazon. So I've used the BABA service a number of times because on a number of products, like it just doesn't matter if I get it in 3 days or 3 weeks. So I think this company's got great potential, and it's certainly showing it today. And there's another Chinese one that's a leader.
Dr. K, real quick,
yeah.
Would you treat this as a viable gap up here today?
You know, it's a good question. Based on the weekly chart, where you had this long platform over the last few months, and it's coming out of that platform, I like the overall pattern. And I'm just looking at the way it's been trading today, and I think it would qualify. I think it could certainly go higher from here. And right now, the risk in getting into this position is really low. It's trading about mid-bar. So your risk here is, and if you allow 1 or 2% downside, your risk is maybe 3%. So I think I'm on the verge of putting this one on. I was going to run it by you before the open, but now that we're talking about it,
well, I think it's probably actionable, mainly from the standpoint. Here, we'll give everybody a little inside look about how we hash these over. I think from the standpoint of risk, that can be fairly well controlled here, since you're only about 1% above. What are we at? 91.26, I think, is the intraday
That's
low.
Right.
So you're less than 1% away from that. But I'm watching the 620. We can see it right here, and you can see that you look like you want to roll up. You've been above it all morning long. Here was the opening, so it's only been an hour and a half since the opening, and it's basically been tracking sideways. So I would kind of watch it as it possibly comes in here, and maybe it'll come off, it'll undercut this low here and maybe set a new low, but it doesn't look ready on the 620 chart just yet. But you know, we've been talking about this one in the webinars for the last few weeks, and it actually, if you look at this thing, it shook out below these lows here in the 200-day line back in late June when we had the Brexit sell-off, and then that came back up. You issued a pocket pivot right here, and I think there's another one somewhere in here along the way. I forget where, but it's basically had one pocket pivot, and it never really looked back. It's held along the 10-day and the 20-day line and was moving higher. So if you actually came in and bought that, you would have had about a 9% cushion going into earnings, and it seemed to me, with a lot of these other Chinese names doing really well, that the risk was a little bit lower than usual holding it if you bought it lower. And now you're up here, and I think your point about it coming out of this long low base formation, or platform as you put it, looks constructive. So but I'm watching on the 620, it seems to be holding. You actually can see you got a crossover here on the slow moving average, the orange one, cross to the upside here, which would be a buy signal as it's coming in, but you're also getting a MACD cross down here. So it's a little bit tough to gauge here, but the bottom line is, if you wanted to give this a shot, then you would buy it right here and use the 91.26 low as your selling guide, and you could bail out real quickly and then see if you can come back in. But a lot of these viable gap ups will do this, and then they'll head higher. I mean, we saw Twilio to have a viable gap up, and then it came in and bounced more or less off the 10-day line, which I thought it was viable there, and now it's heading back higher. So they'll fake you out. So it might turn out the same way. Anyway, so I think it's worth a shot. So you could put out a report on that if you want, Dr. K, I guess.
Yeah, yeah,
Oh,
I
by the
think
way,
so.
people are noting your audio, which sounds really good. Is that new headset that you just bought?
Yeah, the other one I got, it was a condenser mic, and got great reviews, but apparently
Doesn't work.
it wasn't very good.
Yeah. So,
Yeah,
well, that
so
makes a big
this one's
difference. You're
much
a
better.
lot clearer. So now people can be more keyed into your brilliant insights. In any case, carry on.
Yeah, there's no ego here. There's no brilliance. It's just we do the best we can. So the market always throws you for a loop once you start to think you're better than it, or so. But we know that.
That's right.
I wanted to mention, yeah, another Chinese name is WB. That is the Chinese Facebook, and this one certainly has been. It didn't really give lately much of an entry because simply it went to new highs and then never looked back. It reported earnings a couple days ago and streaked higher. But this is again one for people's watch lists because it certainly could set up and potentially if it comes back into an area of support, it could be become actionable on that.
Hey,
On that
Dr. K,
grounds.
what do you think about the fact, though, we put it on back here, right here in early April, and it's formed 1, 2, 3 bases, and it's all broken out, and this is the biggest move it's had out of any base. Do you think it's starting an accelerated, say, parabolic move to the upside from here, or do you think this is getting a little bit long in the tooth and may pull in?
Well, I think right here I mean, based on the whole fundamentals of the company and where earnings are headed and where they've been, I think it could keep going, especially if the markets continue their trend.
So how
It's
would
showing a lot,
handle it
great
then?
leadership qualities.
How would
So
you
I would
handle it?
not buy it up here, of course. It's too extended at this level, but I would like to see it pull back into at least the 10-day, if not the 20. It has a tendency to come back into the 20-day, maybe
Yeah.
undercut the 20-day a little bit, and then set up and go again. So you could use the 20-day as a rough guide on taking an initial position. I know some people like to buy on some sort of strength. So if it hits the 20-day, tightens up, and then exhibits the first day of strength off the 20-day, that could be your buy point. So then you're still not buying it too far away from support.
Yeah, that seems like a one way to handle it. So anyways, but that's been a great name for us. I mean, it's more than a double since early April, and it's been one of the best names on our list. Anyways, carry on.
Yeah, that one and NVIDIA has been fantastic. That's shown some great qualities. I mean, it's almost yeah, it's about 50% higher from its original buyable gap up. And yeah, I think they're reporting earnings. What is it? Next day or
Today
two?
after the close. Today after the close.
Okay. Yeah, and then right now it's not really showing any clues, but it's very tight in the pattern, so it seems constructive. And you'll note that the last 4 earnings reports it gapped higher, but of course that doesn't mean anything. It could be the 5th time's not the charm. So just obviously be aware that the company is reporting earnings. And there was one other stock I wanted to talk about. It was another Chinese name. It's the YRD, because this whole sector seems, well, Chinese stocks in general have been doing very well. There have actually been some other ones that are low in the base that had very low relative strengths, but then tightened up and started to shoot from low in the base. So those would be, for instance, candidates, especially if you see voodoo pullbacks into areas of support. Those would be candidates for possible pocket pivot moves, but you could call them, off the bottom type pocket pivots. Pocket pivots generally we're looking for.
I'd point out also, Dr. K,
Yeah, go ahead.
we started talking about this in here in the webinars a while ago. So I've actually tried to play this once, but it's so thin. It trades 575. Well, right now 529,000 shares a day, I think. No, 601. And it's so thin, I have never been able to really get a meaningful position. But we were onto this pretty early in the webinars. We never put it on the focus list, but it's moving higher. I'd look for pullback into the 10-day as a possible entry point here. It's stalling a little bit. It tends to be volatile, so a pullback in there would be your best spot, don't you think?
Yeah, definitely. I mean, it's kind of volatile up in here, so I would definitely be buying this on weakness. As far as the thinness of companies, yeah, it's on the thin side, and as we know in this market environment, you're better off buying more liquid names for a few reasons. First of all, they tend to be more reliable, less volatile, so your risk reward is generally better. But if you get a name like this, which is really proving itself and seems to be a leader in what it does, basically it's an online service that makes loans, but it uses the internet to connect borrowers with investors. So it's far more efficient than conventional banking. And so it's got a great story. The fundamentals are there, and so it's a bit thin, but you could forgive that because of of where it positions itself. And as far as a rough rule of thumb, I mean, when you're buying a stock, you should generally not be buying any more than or holding any more than 1% of the average daily trade. That allows you to get in and out fairly painlessly. So everyone's got different sized accounts. Some people I know might be playing with as small as a few thousand in some cases. I mean, we've had some questions from members, but generally I assume that people are playing with tens of thousands in the markets. And their allocation into a stock therefore may be only $10,000 or 20,000. So 1% of the average daily trade in this case would be fine. But if you're playing with hundreds of thousands or millions, then obviously if you have a $5 million account, then you can only buy say $100,000 position. That's 2% of your account. That's meaningless, and it's not worth the distraction. You generally should be sizing up in positions and only playing a few names so you can focus on those. So anyway, that 1% rough rule of thumb seems to bode fairly well, and you can also see how the stock trades just by examining it. So that 1% can obviously be adjusted upward or downward. So anyway, this is one also for the watch list.
Okay,
oh yeah, I wanted to mention.
I got one for you real quick.
Yeah.
What do you think of this?
Mm-hmm.
C-Trip. Let's see. Here we go. You think
The other Chinese? Yeah, I've seen this one.
And also VIPS has been trying to turn around, and YY. I think this is another little Chinese name. But a lot of these are starting to turn and remind me of Baba. Maybe a couple of months ago. So you might want to keep some of these on your watch list as they come up the right side. They may set up in some manner. Anyways, go ahead.
Yeah, look at that the YY right there had that voodoo pullback into support, so it's quite optimal in terms of buying either as it's just settling down in that volume dry up, or on that first day when it starts to spring forward. These are all actionable types of patterns that we've talked about a number of times in the webinars. And I mean, it's just simply that the QE environment has really distorted things. So normal buy points or normal buy points often are become abnormal, and abnormal ones become more normal. And this is a good example of where you could get a lot of profit in a short amount of time as a result of taking advantage of these low in the base kind of patterns. And yeah, pocket pivots certainly have been viable for these types of patterns over the last couple of years. But of course, I know there's people who want to have all the ducks in the row, and they don't want to touch these because they are more susceptible to gap downs and so forth. So they want to stay with fundamentally top line names, and that's all fine and well. Maybe it means you just trade less, or when you get a great name like an NVIDIA or whatnot, then you size up more into that position. Now, as far as the VIX, I mentioned the VIX had been hitting new lows, and the VVM itself, it's closing in on 30%. It's almost there. The signal, it went to this sell signal. What was it in July? And it has had a few other times where it just sits on the sell signal, and because the market's going into a nice uptrend. And in fact, the longest period you can see on a weekly chart was back in let's see, it was late 2010 or September 2010, and the market went on a very tight upward run for a number of months, and the model just sat on its sell signal. I think it was almost a 6-month sell signal, and it gained about 56.3% on that signal. So it is possible that these signals can go longer, a lot longer than you think, especially with QE now fully at the helm. We don't know how long this uptrend is going to go. I mean, so far everything looks intact. But again, there's nothing wrong with taking some profits along the way with these sell signals. The model does not have a profit-taking mechanism built in on sell signals. So it's up to each member to determine when they want to start taking some money off the table. On the buy signals, of course, it has incorporated that 15% profit-taking rule on UVXY. So that accounts for in the table the bold-faced entries, which denote that. But at any rate, this is a nice high-class problem to be in, and I would say don't get complacent because the market tends to know when you do, and tends to surprise. So at any rate, I will, on that note, turn it over to Gil.
Well, I think you covered all the juicy stocks. Like I said, I like the Twilio. They don't have earnings, so obviously it doesn't fit Can Slim. But if you recall, if you go back to 2013, I believe when Tesla had its big run and got going, it didn't fit Can Slim either. And I remember Solar City had a huge move, and it didn't fit Can Slim either. And I remember in 1999, Dr. K, we were buying a lot of stocks that were doubling and tripling and quadrupling. That didn't fit Can Slim either. So, I know some people are religious about it, but I think it's a very limiting system. I think you can focus on price volume action, and that's primarily what I do these days. And that gets me into names like Twilio. I know that Acacia, which these guys announced earnings today after the close as well. This one's been more of a Can Slim type IPO, but it hasn't really provided any real. I'm not sure why the volume doesn't show up down here. Let's try something over here.
This has been
there we go.
quite a champ.
But it's had some pocket pivots in here on the breakout, and so this one's gone nuts. The whole the Telecom group also has shown some strength, but this has been really a big IPO leader, and this one does fit Can Slim. So you can always find something that fits Can Slim that works if you're a Can Slim. If you've been brainwashed into believing that Can Slim is the be-all, end-all of investment methodologies. But I can tell you go ahead.
I noticed that on some of the social sites, there have questions been posed about, why doesn't Can Slim work anymore? Or, what are the failures of Can Slim? I mean, it's clear that it hasn't worked for years. So, but I'm surprised that it took this long for people to start realizing that it doesn't work in this environment. I mean, we're year 7, year 8 into the QE environment, where Can Slim has just not been. It didn't work. It didn't work in 2004, which is how I came upon the pocket pivot concept, because breakouts weren't working any longer. Can Slim, of course, doesn't just have to do with the fundamentals. It has to do with the whole technicals of breakouts and the M in markets. But 2004 was very compressed, so was 2005, so you couldn't buy on a breakout. It would be too late, and then you would get nipped for 7 or 8%, and then you get nickel and dimed to death on a lot of these names. And today, we're seeing even more challenging environments, but nevertheless, I think it's interesting that people sometimes stick to certain methods that proved themselves out. Well, I mean, Can Slim proved itself out in the 80s and the 90s. It worked great. That's 20 years. So then I guess it takes a while for people to just digest the idea that it no longer works. But all you have to do is see that markets have changed. In 2004, it was very clear that markets had changed. They weren't the same markets that had traded in the 80s and 90s. So, and I'm always doing research trying to figure out, okay, well, there's got to be a better way then. And I mean, what doesn't kill us makes us stronger. So that was a good thing that happened. Otherwise, the pocket pivot and the buyable gap up came up shortly after pocket pivots, because that I noticed in doing the research that seemed to have a statistical favor with that kind of pattern. But yeah, right now this is a great Can Slim name, but for every Acacia Communications type of name, there's probably 50 that are failures, or can't really. You got to buy them on the pocket pivots, or in this environment, buy them on voodoo weakness when the volume dries up and consolidates in a constructive way. So these are different ways, different tools in our tool chest that we've used to combat the QE environment. And yeah, at any rate, I think the CanSlim concept is on its way out, because I think more and more people are starting to just wake up and realize they got to have other tools at their disposal.
Yeah, I would also point out that having, when I was head of the institutional services group at O'Neill, back in the early 2000s, a lot of our institutional clients, a lot of the mutual funds and hedge funds, they weren't relying on past data. So I think one of the problems with CanSlim these days is that, and I think I've talked about this many times before, you know, if you look at the 80s and the early 90s, not many people had access to the data that you could get from, say, the daily graphs and especially the O'Neill database books, which were the institutional product. But now everybody can see everything, and I think everybody sees it, and they all act on it at the same time, and so it becomes very obvious. You know, if a company has 5 quarters of earnings up 25 or 30%, everybody knows it. There's nothing new, and everybody can act on things fairly quickly. So the institutions back then were asking us for more data on Wanda, which is the institutional product, I guess, that correlates to MarketSmith, but they wanted us to put more earnings estimates data, and they wanted a way to also put their own earnings estimates data because their analysts do their own work, and they were trading more on the basis of a forward-looking view of a stock. And I think you see that now. You know, when Tesla got going, it didn't have any earnings. It didn't fit CanSlim. I think it wasn't until it got into like 150 that it started to show some decent earnings, but only like a couple of quarters at most. So even on that basis, it was minimal. But I think people are more forward-looking, and so what is the best way to get a sense of the forward-looking story of a stock? And that's the price-volume action. Like it's like Chip Anderson from StockCharts.com. I don't know if any of you know him, but he'll tell you that fundamentals don't really matter as much. Everybody knows them, and that you can do quite well just following the technical action of stocks. And I agree entirely. Now, you might throw in another sort of idea that the theme that the stock taps into, you know, thematic basis. So Tesla was a brand new area of the auto industry, and they were doing it in a unique way, and so that's a major theme. Same thing with a lot of these cloud stocks that have had huge moves, and among those I mentioned Splunk is one, Workday, even Salesforce.com had a huge move before it ever had earnings, and Amazon did the same thing. And now these things are showing some earnings, and but they were trading on the basis of a forward-looking story and a strong thematic basis for a price move.
I think the theme has always been the key in terms of the way I've always approached the market. I mean, even in the late 90s when you had so many internet names coming out, publicly traded, I did my normal reading, which is, I'm reading through all these different red herrings and figuring out, what is going to be the true leading company. I think that's essential, and you can't always tell that just from the fundamental numbers. So that was true then. It's even more true now because like Gil was saying, a lot of the fundamental numbers are all there. Everyone has access to them. But when you take the fundamentals I'm using just to kind of complete the picture. I want to know the story first. That's the key. And TWLO has a great story associated with it. So does Baba. And you want to know, like, well, where does this company have the edge over the others? Baba's got an edge over Amazon in certain ways, and its network is incredible. It's so vast. It seems more penetrative than Amazon, and that's how they're able to provide free shipping. I think across most of their products. At least I've never had to pay any shipping. So yeah, it's there's some new. I always love to keep on the edge of technology and what's the next great thing. What's the next killer app? I think a killer app is a company that says postage is free, and plus, by the way, all our products undercut our competition. So that's a killer strategy right there. And I know a lot of people in different parts of the world use this service. So it's proving out. Okay. Oh, and I did want to mention about the CanSlim stuff. Just a little anecdote about in the late. You remember that he banned all his in-house portfolio managers from trading biotechs just at the wrong time. I mean, I
I
was
remember
making
that.
pretty damn good money in my own account and the firm account in '99.
Yeah, that's when we were
Because
like making 50 points a day and stuff like DNA, or if I recall
yeah,
correctly. And
CRA,
yeah, CRA was
CRA,
another one.
and then he banned it at the start of 2000. So that first quarter, these things went on a hot streak.
Yeah.
And my personal account went up into the triple digits on that first quarter just on that basis. And the firm account, because I couldn't trade those names, I only finished the year 2000 up 28% because I couldn't trade those names. And it would have, that account would have been up, a few 100% otherwise because these names were hugely liquid and they were streaking like I don't think I've ever seen an industry group move so far so fast.
No. But that was, Bill could screw up at times, and but he was human. So this whole guru thing, I think, is all BS. Anyways, getting back to a theme that I think is compelling in this market, and Twilio is based on this, is Square, another cloud-based company for transactions, and this one had a viable gap up sort of move. You notice, so we've been talking about this. If you guys go back somewhere down in here, back in June, early July, and I was talking about this potentially bottoming and starting to show signs of becoming oversold, undercutting the lows here on the on this sort of low base formation. So you undercut this low here, and you undercut this low. I'm sure you can all see that. And then you flash the pocket pivot right here, I believe it was, at the 50-day moving average about 3 weeks ago. And now you gapped up on earnings, and you came in, and here's the top of this falling window. See, there's a falling window. Let me know how my drawing skills look. Do we have panes in our window? I guess we do. But it comes up near the top, but you got to figure some idiots were either buying here or buying here, and there's some overhead, so that gets sold into. But in net, I think this thing is likely to go higher. I'm actually long this stock, and I just buy it when it comes in down towards 11, and I thought it might get close to the 10-day line at 1081, but that's 40 cents away. That's not a big deal. But this is starting to show some volume decline and drying up, so I think it could turn and go higher and head back to the highs eventually. So I like this name, but I think it is a volatile little stock, so it's going to have some porosity below this Bible gap up low at 1129. So you get down, what was the other day? Here, let me clean up this screen. I made a big mess. It made a low of, let's see, what was that here? 1085. So, but I thought that was a good place to be buying the stock, and now it's kind of turned and looks like it wants to set up in it's setting up in a flag. Looks like it wants to set up to go higher. So that one, I like this stock, so I'm long this one as well. Netflix, I think, is very interesting. There's been news of back here, I think when you had this move a couple of weeks ago, there was news that, or it could have been this gap up. Yeah, I think it was this gap right here. Yeah, that was it. There was news that this guy, Jay Gould, who's one of the original board members at Netflix, was buying the 600,000 shares. So the stock, held tight after that and then posted a move up through the 20-day line, backed in again, volume dried up, and then you had a pocket pivot right here on, there were some rumors that Baba was going to buy them out, but that, to me, that's neither here nor there. It doesn't seem to make any sense that Baba would buy them out unless they're going to try and compete with Amazon's Prime. I guess that's a possibility. But yesterday after the close, there was news that this guy, Jay Gould, doing it through his, Orange Partners, it's an LP. They bought another 300,000 shares. That's 900,000 shares they bought since the breakdown after earnings in mid-July. And so you got to wonder what the hell's up here. And I'm thinking there's going to be some news or something that drives this thing nuts to the upside, and you may want to be thinking about owning at least a smaller position in this. If you look at this, you've had 1, 2, 3 shakes to the downside here, and each time you've undercut the prior low. See that? So now that's kind of got everybody bearish. You had a big day here on big volume where it gapped down, but it held after undercutting and turned and went higher. So this could turn and go back to the upside. So I've been working this thing as a trader. You know, I'll buy it in the lows here. It runs up, I'll sell it, and I'll buy it back. And it runs up, I'll sell it, and I'll buy it back. It works really nicely that way. Another stock like that is Gigamon, which I'll get to. But I think you may be setting up for a pocket pivot again today off the 50-day line. You need to trade a little over 10 million shares. Let's check this real quick. The biggest volume here would be right here. Is this? I think it's either this one, 9,836, and over here you got 10,135. So 10,135 would be what I'm going to set my alert at. So we're going to go here, volume total, at or above. So I'll just make it 10,136, and if that goes off, I'll know we've flashed a pocket pivot on the day. That's how I set alerts. It looks really hard, isn't it? That's how eSignal works. I'm assuming a lot of people probably use eSignal or at least TradeStation. Now let's get to Facebook. Okay, I have to disclose something here, and that is that I'm actually short the stock right here. I was long it from yesterday off the 10-day line, and it ran up, and it just seemed sluggish. So I decided to flip and go short just to test it out to see if there's a bid in here. Now you notice it's up 29 cents. No, I'm not making any money on my short, but I'm not really losing any money, but it's really going nowhere yet. But it just seems a bit sluggish, and it may be over-owned. I think people are more focused on some of this newer merchandise stuff, like the Twilio, like the Urandai, like the WB, like the Acacia, and this may just be over-owned. So I wouldn't be surprised if you saw it retest the 20-day line and pull in. So I'm kind of playing it for a tactical short. And also just to kind of get a feel, is this thing really drying up in here? The volume seems to be getting, what's the volume level at now, Dr. K?
We're right at minus 29%.
Yeah, so it's drying up, but it's also, it's drying up on a day like today where it's trying to move higher and the market's going nuts on the upside, and it just seems very sluggish. So, you know, the obvious answer there is it's over-owned mainly, and so on that basis there's nobody left to buy it. So I think it's probably going to be a slow mover. So anyways, we'll see how I do with that. My stop is at 125.38. That's the high of the day, so that's pretty tight. Okay, Zendesk, here's one. I think we talked about this last week about buying it at the 28 level because it was able to get back above. And this is a cloud name, okay, another cloud. There's a lot of variations on the whole cloud theme. This is one of them. But you saw the shakeout after earnings. This is what I call the spin cycle. But it closes right here, just above the top of this base. And that enables it to turn and go higher. You pull into the 10-day, volume's picking up, so not really what I'd like to see, but I think it'll probably, you know, flop around sideways. Maybe 10-day flattens out and you get tight and get in there again. But here's another stock. I think it has no earnings, right? So it doesn't fit Can Slim.
Yeah, there's no earnings out to the next couple of years.
Yeah, I think it's funny. Some people will get offended about Can Slim, but I really think people are dumb in that way. But you know, it's typical because people don't want to have to think for themselves. And Can Slim, you follow a few rules, you have a checklist. You know, it eliminates the need to think. But I think I would tend to think that unless you're able to develop some serious critical thinking skills, you're never going to be that good as an investor unless you get a 1999 market where you buy anything and it goes nuts to the upside.
Yeah,
so.
because the only thing that doesn't change is change, and so there's no black box. I mean, you know, people are, you know, our first book, you know, people enjoyed that very much, and you know, we mentioned that there is no black box. So you know, you could take these strategies, and they're not going to stay static. I've mentioned many times that the markets change. When there is a material change to the market, the models will adjust accordingly, and that's how you stay ahead of the markets. Otherwise, you're a dead duck, and there's so many pitfalls to I think that it's a tendency, it's a human tendency to when you've seen something work for so long, you want to believe it'll just continue, but nothing is static. So.
All I have to say is price volume action rules. Everything else is for tools. That's my new model.
Yep.
I think I'm going to have a VoSI t-shirt made that says that on it.
That's cool. I like that. Who
wants to order one? Somebody says, this is some interesting information. Thanks for this, Chris. Twilio's largest customer is Uber. Zen is also a customer, so it's a cloud play of cloud plays. I like it. I better start
Excellent. Yeah.
buying more now. So what about Square? I would think, Square allows you to put this little Square thing on your phone and you can charge up credit cards. So anyways, market's moving pretty nice. What's the volume looking like right now, Dr. K? Are we higher? No, we're actually running lower. So market's running higher, but the Nasdaq's still below its all-time high. It's got to get to 52 to close above it. What is it? 52.31 and change. So say 52.32. We're at 52.29. Anyways, let's cruise along and look at some other names. Looking at Splunk, I think Splunk is decent as a cloud name. They come out with earnings at the end of the month, but it's been trying to set up, and it's coming up in this weird-looking pattern. And then, of course, we look at now, which looks to me like it wants to go higher. It's setting up in a cup with handle, and nobody's really selling it. As the volume dries up down here, you can see that. Workday comes out with, and now actually has the bonus of not of already announcing earnings, so you don't have to play earnings roulette. I know you guys love to play that, but and the Workday, same thing, setting up in a very similar fashion. It already tried to break out and then pulled into the 20-day line. Now it's tightening up along the 10-day line. Volume is drying up, and that looks like it wants to go higher. Here's Adobe. I think this is very interesting. Adobe undercut this low here. Can you see this? Undercuts this low right here, and it looks like death, but notice the volume's not above average. It's picking up, but it undercuts and then turns back to the other upside. So it's an undercut and rally type situation, and then you push back above the 50-day, and then yesterday the stock pushes above the $100 century mark, which in my view makes it viable, and it is continuing higher. So now to me this is viable using the $100 level as a guide for a stop. If you wanted to, you could use the 10-day line at 98.36, which is about 3% lower as a looser guide for a stop. But this thing is acting pretty well, and it look pretty poor right here. So I'm looking at another one, which of course the big cloud stock, one of the first ones. Salesforce breaks the 50-day line here yesterday on a pickup in volume. It's looking like it can't really get going, but if the market keeps going, it's probably going to go higher. So watching Netflix kissing the 96 level, I think this thing's got to get to one. I think it's got to get to the 200-day line, so 101.22. So Gigamon's been acting really well. It's holding tight along the 10-day. It looks like it wants to go higher. So sometimes stocks will stair step higher. You notice how it runs up. This is like one of these stocks I was talking about earlier that you can sell into the rips and buy the dips, and you do that over and over again. And notice how it just seems to do that every time. It has a nice rip, but then it comes back in. And the 20-day line was support for the stock before. You can see that along here. And now I'd say this is the last time it started to follow the 10-day line. So it may be starting to accelerate, and this is also in the telecom area. So Acacia, and it is a new merchandise name. So Acacia is another one doing well. That's a new merchandise name. So there could be something thematic here. And if we look at the weekly chart, have you guys noticed I'm getting better with this pen in terms of turning it on and off? But this is what the stock looks like on a weekly chart. It came public, forming a big structure, and it's coming out. You notice Weibo is the same thing. It's a big, ugly structure, and it's finally broken out to new highs. So a lot of times stocks can come out of a big post-IPO consolidation and then just rip higher. Baidu did that in 2006, 2007. That's why Weibo reminds me of Baidu. If we go way back, I think I've showed you guys this before, but we'll go all the way back. Yeah, here's the base that Baidu formed. You can see this. It's about 2 years long, and then the thing came out. But it was a real hot IPO in 2005. I remember Bill O'Neill waking me up when I was sleeping in my hotel room in Maui at 2:30 in the morning, which I guess was 4:30 in the morning or 5:30 in the morning on the West Coast, and asking me about this Baidu IPO. And of course, if you didn't want to buy it then, you wait for it to set up. 2 years later, it sets up. It has a big run. So now we're looking at Weibo. has certain similarities in that regard, a 2-year base, and now it's started to run out of this thing. So this is where I like to buy them. I know some people, we put it on down here, but when they start looking like they're ripening and really becoming an institutional name, that's when I really like them. So Palo Alto Networks, the cybersecurity group, I think that's a compelling thing. But all we've seen is names blowing up. So Fortinet has blown up. They came out with earnings, they blew up. See the big gap down? Now it's testing the lows and it doesn't look so good. FireEye's been a piece of garbage. It looked like it wanted to get going, but it gapped down on earnings. CyberArk gapped down on earnings. Now, this one, I think fundamentally this is probably one of the stronger ones. And notice what you guys see something here? Something unorthodox, where you hold the 50-day line, you undercut this low. See this low from around mid-July, a little after? And the 50-day line, you hold it, and you close above this low. So this low here is, let's check this here. Let me get the mess out of the way here. Whoops. The low yesterday, the low on this low is 50.87. So once it gets back above 50.87, you can go long the stock and use that as your stop, basically. And that's not the shakeout-plus-three baloney, which I'm going to tell you, that whole shakeout-plus-three rule is a bunch of crap. There's no statistical studies that I've seen that show that it needs to be 10% or some 8% or whatever, like IBD tries to BS you into believing, like they've done some deep research. My work shows that all you need to do is, if you see the undercut, all you have to do, once it gets back above the low of that undercut, the closer you can buy it to there, the better, because then you can give it maybe another couple, 3% below the prior low. You just buy it, and the thing goes higher. If you're sitting around waiting for it to go up 8%, you're probably going to miss most of the move. So, but to me, that whole thing is just typical IBD, statistically insignificant. We looked at 5 examples and came up with a bunch of rules, and now we're going to sell it to you.
Yeah, that whole shakeout-plus-three, I mean, when I read Bill's book in '89, I mean, it had a huge impact on me. It was fantastic. But that whole shakeout-plus-three,
bunch of BS.
I researched that. I never could make heads or tails. I know what he's getting at. I mean, yeah, there is sometimes a shakeout-plus-three. But if you look at the whole, if you take stocks that are CANSOM quality and you apply that rule, it fails. There's no, I've never made rhyme or reason out of shakeout-plus-three. Never been able to use it to my advantage.
But you know where he got that from. If you go and read Jesse Livermore's book that he wrote, the book How to Trade in Stocks,
that one.
You can actually download a PDF copy that somebody scanned of the old original book. And he talks about, he has an old rule where if a stock is coming down and it's been in a downtrend for a while, and it undercuts a prior low by 3 points or more and then turns back above it by 3 points, he'll buy the stock. Now that was in the 1900s, early 1900s. So that's the rule, okay? So there's nothing specific about that, but that was sort of a general rule that he used at that time. And I don't really think it works anymore. But, to me, I mean, and we all know, you and I both know, Dr. K, the whole model stock thing is all pretty much cherry-picked and massage and the data. So there's a lot of BS there, but there's also a lot of great work there, and it's similar to what you've seen in the work of Jesse Livermore, Richard Wyckoff, and Jarvis, and so on.
Yeah, I mean, the model book things are, I mean, you can apply them, but you have to know how to apply them. You can't just take them barefaced,
right.
Like the model book I worked on 1998. I mean, I was one of 3 of the main editors, and what it struck me that the sample size is defective. There's a few defects that you can't get around, but the book still served, and some of his other model books that I have, they served as useful tools if you know how to apply them.
Somebody's asking about this one, wireless charging of devices. That's going to be a new theme. It's kind of interesting. I'd have to look into this, but in terms of technicals, let's take a look at this. It's coming out of a big ugly base, okay, so that might be a positive if it can get out of there. I'd have to look at this more. Technically, though, it's kind of it's choppy, it's all over the place. Let me look at this on.
I think actually a company that would be more interesting is if they've got a technology that charges really fast without damaging the device.
Yeah.
And whether it's wireless or not, the wireless thing with this it sounds cute and everything, but it's not it's not like an essential thing. I mean, these days everyone's trying to figure out how to charge their phones faster. The problem is that you can only charge these batteries so fast, or you kill them. But there's got to be a technology that's going to come out that charges at 10 times the speed.
If
And
that's the
that would be
case, then
interesting.
can you tell us, Andy, if that's the case with this one? I don't know. In the meantime, I'm just looking at it here. What I do notice is volume is minus 33.4% below average for this time of day. It's pulling into the 10-day line. Maybe it's something to look at here. I mean, Energis Corporation, I like that. I'm going to have to make a note of that one. That's kind of interesting. Okay, where were we? Okay, getting back to this Palo Alto Networks, which someone's asking about. You are undercutting this low. This is the big granddaddy leader of them all, I think, the big stock leader, but it's just not looking too good. So I don't know. They come out with earnings in a couple of weeks, or at the end of in a couple of weeks, at the end of the month. So maybe something shakes at that point. How about how you doing with your Etsy there, Scotty? Here's one that's gone nuts. That one's started up here, so they sell arts and crafts. I actually had dinner the other night with my old assistant from Merrill Lynch, who I haven't seen for 20 years. She's now a painter in Stockholm, and I think she sells her stuff on Etsy. Anyway, so maybe that's a big thing for wannabe artists. I don't know. Maybe I could sell my paintings. It is true, actually. I did try to become a painter way back when in my mid-20s when I moved to Maui for about a year. But anyway, that's another story. Okay, let's look around here. Some of these... yeah, that was a nice move. So you sold into the move. I think the 3 days up, when you get the 3 days up here and the gap on earnings, or even on the 2 days up, that's huge. I mean, that's 30% in a couple of days. You kind of have to take that, at least part of it. Now it's setting up, but it looks like it already set up. It's in a tight little flag, and volume dried up on the right side of that, a little 6-day flag. Never even touched the 10-day line. So I noticed Square's moving higher. What's going on? Are you guys buying it? I think it's going higher. I think it's going back to the highs. So that's just my opinion, which probably doesn't count for much. Let's see. Somebody's saying the GDX. I think the GDX looks good. I mean, I was been playing. I'll buy these for trades. Like Agnico is one of my favorites on the pullback. I bought this one on Monday, and I sell into the 60 level. Now it's kind of tracking sideways. Silver Wheaton's got some tax issue, but it's going higher. That doesn't seem to be stopping it. First Majestic had a little reversal and pulling back. But what is all the action in the gold stocks and the precious metals is telling you the Fed's really on hold. And every time we've had a pullback in the metals, it's been because there's been some phony economic number. Because GDP is overstated, even though it's really weak, 1 to 2%. It's overstated because the government understates inflation. So when they adjust the number, they can make it look positive. It's probably flat to negative. The jobs number, 200,000 of those jobs reported out of 255,000 last Friday were due to the birth-death model adjustment. And the birth-death model, from what I understand, it essentially assumes that there are jobs created by new companies that aren't counted yet because they're not in the survey. But it seems to ignore the fact that today, for the first time in, I think, 70 years, we have more companies going out of business than new companies starting up, which is kind of a typical thing for what I'm going to call the Bush-Obama economic malaise that we're in. I think spread the blame around. There's plenty of blame to go around, and I think both Bush and Obama are two of the worst presidents we've ever had in terms of what their policies have wrought, and so nobody can get offended by that, or everybody can get offended by that. But I think it is true. But on the other hand, look at it this way, you guys. We've now been through nearly 16 years of two of the biggest bozos in the White House that the country has at least seen in my lifetime, and the country has not been wiped off the face of the earth. That's a positive. So, anyways.
Yeah, the problem is the trend. The trends are not looking very good, but
No.
it's interesting because a few years ago, or let's say 5 to 10 years ago, there were trends that were in place, but no one knew about them, and now those trends are finally coming to light thanks to the internet. And it seems like Betsy Coda's book's very timely about Gavopoly in the 39th day. He wrote that a
Yeah,
couple of years ago.
I think the people will rise up and straighten things out. I would not underestimate the power of the people. Uh,
That's what always happens. If you look at it, actually, several thousand years of recorded history, the people always have the final say, not government. And I think that we are at the tipping point where we will start to see, breakdown, and some sort of revolt and revolution. I mean,
right.
there's stuff going on in Turkey among the youth movement because the government's tried to do what Mao did. I mean, Mao jailed and killed and exiled over 17 million youth. And you can Google all this stuff again. Google it, verify it. And that's the same things happening in the UK. Over the last couple of years with certain laws they've passed, they're enacting them and they're doing 9 super prisons there. They've privatized their prison industry. It's really sick, but it is where we're at. So,
Right.
it's easy
But
to get
I would
upset.
also say don't get overly wrought over it and don't focus on it too much because when it comes to making money in the market, who really cares? It doesn't matter. Uh, so,
Yeah,
it's easy to
Sekoda
get
says,
depressed. Don't get depressed. That's what I say. Anyways,
right,
let's
Sekoda
look
always
at,
says keep your focus on where the profits are, or what Bill O'Neill used to say, always go to the daylight.
right. And my view is I don't care, whatever the politics are, whatever the situation is, show me a way to make money. And that's my job, and I'll try and do that. The gamers are looking okay. Activision hanging in there. Uh, I'm not sure what this thing is doing. It had a nice earnings report. They're estimated to make $3 a share next year, and that means it's relatively cheap. So why isn't it seeing an expanding PE? I don't know, but it's a little bit slow. EA losing some momentum, but it's just basically in a big base. One of the things I think you got to watch out for something like ATVI is that you're coming out of this big cup with handle pattern. It's a little bit sloppy. You could almost say it's a pod with handle, and it's way up here. You can see it's had a long run, so it could fail. I mean, it's one I've got on my, either or sort of list. It could turn into a major short sale situation if it starts to break down. So what's the full name of the 39th day? It's called Gavopoly in the 39th Day. It's a really expensive book. I don't know why Ed priced it so high, but in any case. Take-Two Interactive. This one's holding in really tight after attempting to break out after earnings. So these are all doing well. And then our little friend VoSI, which, look, I got to tell you, in something like this, Dr. Cat, I think putting it on as a viable gap up here was probably asking for too much. And then they got hit with some negative website blurb or something. And
Yeah,
I
no,
think
but we liked
you
it.
buy it on
We liked it
weakness.
before.
Yeah, buy it
We
on
liked it
weakness though.
before.
Okay, look at this. Look at this.
Um,
Okay, hold on. Well, we liked it down here, and we talked about it in the webinars right here as it was at the 10-day line, and it immediately had a big move right afterwards. So that was the way to do it, and then sell into it now. Now look at this. It's okay. You got this long structure over a year and a half long, and it's just barely starting to poke out of it. Now you've pulled into the 10-week line. You held support. That's where you are now. Earnings come out today, I think it is, after the close. At least that's what I saw somewhere. Anybody know for
this one,
sure?
we actually put it formally on as a pocket pivot on the 22nd of July, and then it gapped higher. So
Right.
anyone who bought on that day had immediate they basically were sitting on a 12% profit
Right.
in one day. Now the thing about this company is that yeah, there's a Pokemon craze, and if you look at what is it, Nintendo, they doubled in like 3 weeks. So it was possible that this Pokemania could have swept this quite a bit higher. It's just that report from that website dragged this back down. And also the other thing is that keep in mind, and I mentioned this in the report, that this company is very tangential to Pokemon. I mean, it's not the gears behind the augmented reality technology. If it were, I think it would be doubling or tripling. But there is no one single company that is responsible for that AR technology that's small like this one. So, I said, be very much on your guard, keep your stops tight. If you didn't take your profits already, you better keep these stops tight. And, I'm not surprised it's dragging lower. I took a position in this on the 22nd, and then it did its gap higher, and then I was out, as it started to head lower on volume 2 days later, because I was
Yeah,
just
well,
thinking, well, this is
where's your
flipping
stop,
all
right?
over the place, and I might as well, exit the position gracefully.
Right, well, 835 is your stop. So we get some idiot emailing us telling us that he bought this and he read our book, and it's obvious our methods don't work because he bought, I think 2 stocks and they didn't go anywhere. This one, BSX, and the guy's basically spewing invective at us and claims to be a trader with 40 years experience, and I'm thinking, what a moron. If you buy a stock and you think everything's going to immediately go up, or you can't even tell the difference between something that's maybe more dynamic. Boston Scientific is like a snoozer. You can't tell the difference between something dynamic and also something that's thinner and much higher risk that has to be handled a different way. But you do websites for a while and you run into all kinds. But I would say mostly nice people, but you do get the occasional moron, and I really get disgusted
Yeah,
with them sometimes.
fortunately, those guys like that, I mean, they're a bit
But
crackpotish and they're
far and few
one-offs.
between. Yeah, they're
They're
one-offs.
very rare, and I mean, yeah, you can't really reason with someone like that because they've got their egotistical blinders on, and clearly he had no concept of anything that we do. I
No.
mean, just the things that you mentioned in the letter, I was like, wait, if you read any of our reports or our books or any, if you kept in touch with the website, just read a couple of our reports, and you would see how we
Right.
handle these names.
Right.
So,
But there's
yeah.
people
But
who are
he was only subscribed for basically less than 2 weeks.
like 5 days.
Yeah.
Anyways, somebody says Watt's recent earnings call replay you can get at 877-344-7529. So I don't know. I'm going to try and do some research on them on the internet. It looks very interesting. So, but that may be one. So I'm going to close out. I noticed that wire defense stocks doing so well. Raytheon doing pretty well. General Dynamics doing pretty well. I noticed this TWOU. They came out with earnings and it's been doing pretty well. And then Team is another one. I'm not sure what happened here. They had a big continuation pocket pivot on big volume, and they got nailed. But it might just, it's pretty extended, so it might just be trying to set up again. You might watch this one if you own it. Anyways, I think that's all we've got. It's been more than an hour. So that's all we've got, you guys. Again, if you have any questions, feel free to email us. Just no savage invective, calling us names and stuff like that. Please. Anyways, if you have a good question. So SWHC, someone's asked. Yeah, this one's a short. So I actually shorted it today at 31. I think it was like 50,000 shares. So I'm making a little bit of lunch money right now. But I don't know. I think the whole gun thing is probably overdone. Look at how this looks on a weekly chart. So it was viable along the 10-day, and it gets a jack, but it's reversing. But if you look at the weekly chart, it's sort of pod-like. You notice that you're kind of wedging higher for the last 3 weeks, and you're stalling all 3 weeks. So like I said, you want to watch for some sort of confirmation on this one as a possible pod short sale setup, and that could happen. So, but I'm not so sure I mean, yeah, you could have traded it off the lows here along the 10-day and got a nice pop here, but that's not lasting today. It's disappearing rapidly. And I think they come out with earnings any day now. So anyways, that's all we got, you guys. Thanks for showing up. Have a great weekend, and we will catch you next week. And I hope you all like Dr. K's new headset. You sound really good, Dr. K, I got to say. Anyways.
Excellent.
All right.
Great
Take care, everyone.
So long, everyone.